quality. Define quality first up and tell me why it's doing well.
Yeah, and maybe it could be because people maybe find it a little bit boring, but it's companies with low balance sheet leverage.
You're going to make it exciting, though.
Oh, yeah, I sure will. Low balance sheet leverage, high ROE, really steady earnings, right? So just finding good, solid, quality companies. But like you had mentioned, everyone's always looking for deep value stocks or momentum. But you actually look at all the factor performance this year, quality is the best performing one. And you really don't see that happening a lot, especially when you have a really big market like we had this year. So like 2017, for example, momentum was a top performing factor. Versus this year, you still have a really strong market, but quality's starting to bubble up a little bit. So to me, that says either investors are getting up more defensive or they're thinking maybe it's a bit more late cycle. So you're seeing these other quality names pop up.
Right, so what are some of the quality names and sectors, Tom?
Sure, so if you actually sort of look at the different quality ETFs, there's a big skew towards tech, which makes sense why it's been doing so well this year. So Apple is probably one of the most commonly held quality stocks. That's up 68% this year. Tech is the top performing sector. You get a little bit into healthcare, but just as importantly, you see it avoiding some other sectors, like has almost no energy exposure. So this really big weight into tech is what's been helping drive this quality performance this year.
You said it's late cycle, so why is quality doing better in the States than it is in Europe?
That's a good question. If you actually look what's happening in Europe, the more the risk-on stuff is doing well. So like momentum is doing really well in Europe. Quality's doing well in Europe too, but actually momentum is doing a little bit better than quality. So it has a little bit, and maybe you're seeing it in some of the sentiment shift in Europe because you're seeing some flows pop up in the European ETFs. It might be a little early to still call that, but there looks to be a little bit more risk on, a little bit turning more in Europe.
Risk on and Europe in the same sentence.
Yes.
You don't hear that very often at the moment.